Are you looking at buying multifamily properties, or maybe you already own some and you want to make sure that you are getting the most money possible out of them? If so, this is the episode for you. Welcome to Purpose Driven Passive Profits.
Hey, accredited investors, I'm excited to announce that we have a new deal right now. It's a 49-unit building located in the horse capital of the world, Lexington, Kentucky. This is where the majority of the Kentucky Derby winning horses come from. Its rents on this building are 15% below market for renovated units in the area. To learn more, all you got to do is go to homeinvest.com or click in the link down in the description below. Always consult with a tax advisor, financial planner, or attorney before making an investment decision. Having said all that, all you have to do is go to homeinvest.com or click in the description down below.
His name is Nate Armstrong. He's the founder and CEO of Home Invest, real estate investor for more than 20 years and an Inc. 500 business owner. My name is Steve Warner, and I am the Chief Investment Officer. And today we are going to be talking about how to make sure that you get the most out of your multifamily buildings, whether you are a passive investor and you're looking for the things that you need to make sure of in an operator, or if you are an operator, how you can make sure you are getting the most out of them. We've got some really, really good things that we learned a couple of weeks ago from a master operator. Nate, how are you doing today?
Excellent, Steve. Thanks for kicking us off, man.
Awesome. So let's just go ahead and jump into it. Like, I know a lot of people are just like, well, you mean you go into an apartment building, you put some new cabinets in, you put new paint on, maybe you do some landscaping, maybe you raise the rents a little bit. But what are some things that you can actually do, like super secret tactics that will get the most out of your apartments? Let's go into the first one.
Okay, so what we're going to share right now, this is stuff that the average real estate mastermind or course or anything out there is not going to teach you. No one is going to be teaching this stuff from the front of the room, because this is the more boring nitty-gritty stuff. But Steve and I have paid well over $250,000 to real estate educators and master processes people to learn this stuff. So what you're about to learn, this is the stuff that actually drives the needle, that actually brings your ROI from those low single digits to the double digit type of returns. So with that said, Steve, can I share screen? Can I jump in? And for anyone that's audio, I'm going to verbally explain this for folks.
Yeah, let's do it.
Okay, so first and foremost, when you are picking your lease start dates and your lease end dates, there's a couple of vital things to this. Most people think like, hey, I'm going to sign a tenant for a year. I'm going to sign them on January 1st. And I'm going to run that lease until December 31st as an arbitrary example. The challenge with just picking the first of the month and then the 31st of their last month is that you don't know which days of the week they necessarily end on. And that makes a huge difference for move-ins and moves out. Now, I want to focus on the move outside for a second. On the move outside, think about this. I want you to ask yourself the question, wherever you are right now, what day of the week do most C-class tenants move out on? C-class defines like working class, middle income type properties. What day of the week do most people move on?
I'm going to pick Wednesday, Nate. Is Wednesday the right answer?
It's Saturday. Saturday,
of course
because they're calling Uncle Ned, they're calling Cousin Jim, or Aunt Sarah, or whoever it is. And usually Saturday is the day that they can come together with Uncle Ned's truck and load it up, or they rent the U-Haul, and that's when they're moving. And so if it's Saturday, if your lease ends on, let's just say, a Friday, so if December 31st happens to fall on a Friday, what's going to happen is they're going to call you 3 days before lease end date, and they're going to say, hey, I need until Saturday. Can you extend me an extra day? And then what that's going to do is it's going to domino on you. If you had a turnover crew set to go shampoo the carpets, clean the place, and get it ready for rent the following Monday, you're going to now domino and be behind schedule. So instead, what you want to do is you want to have your leases end on Monday or Tuesday. Monday or Tuesday. That's always the best 2 days of the week, because the tenant's going to see that not when they're signing the lease, but 2 weeks before move out. Now they're going to pay attention to it. They're going to be like, oh, I have to move out on Monday. There's no way I can do that. What I'm going to do instead is I'm going to move out 3 days in advance. I'm going to move out on Saturday. And so then they're going to call you Saturday afternoon, and they're going to say, hey, Mr. and Mrs. Landlord or Mr. and Mrs. Property Manager, I'm all packed up. I'm all moved out. Could somebody do their final walkthrough so I can get my security deposit? And then what's going to happen is you're going to send your crew over there that weekend to get it cleaned up, and it's going to be ready for a new tenant to move in immediately on the Monday or the Tuesday, the day after their formal lease expires. That downtime right there, especially in a market like this, okay? We're in this market now where taxes have gone up. Steve's talked to us a lot about that on previous episodes. Steve, in the state of Texas, you saw taxes double and in some cases triple. We've seen insurance rates go up. Like, costs are going up. The cost of money, financing costs have gone up. Operational expenses for you as the multifamily operator or investor, you've got to keep them in line to make positive ROI for investors. And so this one move, moving your lease end dates to a Monday or a Tuesday, is going to help you keep that in line. Steve, anything we should hit on that?
Yeah, I want you guys to understand this. By moving the date to Monday, the people are going to move out that weekend. You're going to get the place back and you're going to be able to turn it faster, which, let's just say that we're talking about $70 a day. You are going to get an extra 5 days in rent per unit that you do this with. So let's take 5 times 7, that's $350 times however many apartments are in the building. Like, let's just say it's 80%. Let's say you have a 50-unit building and let's say 35 of them turn over. So what's 35 times 350? Let's do that really quick. That is an additional $12,000 a year to your bottom line. Do you guys understand what this does in the property value? Because remember, property values on multifamily are not based on the appraisal value, but on the income that they bring in. That one little tip right there just added probably like 2% to your overall building value. So think about that. So that's tip number 1. What is the operational tip number 2 that we have, Nate?
Okay, so tenants, I love our tenants. I really do. Some tenants, they like to stretch the rules a little bit. They like to bring in 4-legged critters. They like to invite extra guests to stay in the property. And for you as the investor in a deal like that, that's a little bit alarming and concerning. Here's why. More occupants, more critters, etc. It's more wear and tear on your property. It's more consumption of the services that you might provide. You might provide trash, you might provide water, whatever it is. It's more use that costs the owners more money on the property. And so in order to really have a handle on that, we have to get inside the units. And so doing regular inspections is the only way to get that done. Now, how often should that be, and how do you actually do that? And so, Steve, what frequency should we be going inside every single unit?
So at least once a year, but what we actually like to see is quarterly. So the quarterly is just running through the unit, checking smoke detectors, checking on drips under the sink. So drips under the sink, especially if you're paying the water bill, drips under the sink, running toilets to fix for $6 for a new insert, like that right there can save you a ton of money. But besides the savings that we're talking about, we're actually talking about, can you find pets? Believe it or not, on the buildings that we've seen this done in, we usually find about one out of 5 has a pet that is unregistered. So again, let's go with 50 units. That means you have 10 units with pets that you're not collecting on. $100, that's $1,000 a month. That is another $12,000 to your bottom line that you are missing, that you will find if you do inspections.
And so what Steve just gave you guys, that's a huge golden nugget. Literally, he's not walking in the unit doing an inspection saying, hey, you got a pet, get out of here, you're out. He's saying, hey, I see that you have a pet. This pet's not on the lease. No big deal. Here's what I'm going to have you do. I'm going to have you sign this pet addendum. We need to register it so we've got the pet on file. And then you have to pay an extra, insert the dollar amount per month. That's the key right there, is catching it. Or if you got an extra occupant inside the property that's not supposed to be there, they need to get added to the lease, and there is an additional fee for that. Here's so much extra that is per month. Now your revenue is actually matching the wear and tear on the property, or the actual usage on the property.
So these are things that you want to talk to any syndicator about. When you're looking at doing a syndication, you want to ask, who's managing the property? How are they managing the property? Do they have some of these things in place? One of the biggest questions that I've learned to ask is, how fast are your turnovers? and they can go look. They should have what's called a T12 or a T3, which is the rent rolls for the past months. And you should be able to see turnovers. Now, if you want to, you might be saying, well, that gets really nitty gritty. Look and see how they answer when you're talking to them. If they can't give you a quick answer and like well thought through that follows some of this stuff, if they're like, oh, I don't know, we do a pretty good job, you might want to dig a little bit deeper. This is your money you're talking about investing. Now at Home Invest, we are not perfect, but we do this stuff. Like, we are on top of our managers. We actually have one of the best managers in the country. We headhunted to come down and run our properties because we want the fastest turnover possible. And we want to make sure that we are doing these inspections because we know that leads to a stronger bottom line. If you want to learn more about the investments that we have, you can go to homeinvest.com. That's going to run you through our current investment, what we have in front of you. Usually we offer up to a 16% internal rate of return as a return on your money and a 1.8x multiple. That means you give us $100,000, we give you 180 back on the up to. On the back end, I should say, up to 180,000. That's what we aim for, and we have always done very well hitting our numbers, but it's because of these little operational efficiencies like we just laid out for you. You want to make sure, whether it's investing with us or investing in another multifamily deal, you want to make sure that your operator is on top of it, because anyone can just show you numbers, but that does not mean that they are going to hit them. Nate, did I miss anything in there?
No, you really nailed it. I just sum it up like this: like, in this next phase of the real estate market, while debt costs is high, insurance costs are high, and we're still experiencing inflation on wages and other things like that, you got to make sure your operators are efficient. I wouldn't be messing around doing speculative stuff right now. Get your bread and butter, brick and mortar, C-grade housing stock, and make sure your operators are solid. And then you can get the winning ticket and ride through this entire recessionary wave, making money the whole time.
Awesome. So next time on Purpose Driven Passive Profits, we are going to be talking about how we have probably hit the tipping point where we're at right now. We are at like mid 2008 and we're seeing things slide. So we'll see you on the next episode so that you can be a great investor and a great steward of what God has given you. This is Steve and Nate signing off for Purpose Driven Passive Profits. Thanks so much for listening to our show today. Here's Nate with our latest offering.
Hey, accredited investors, I'm excited to announce that we have a new deal right now. It's a 49-unit building located in the horse capital of the world, Lexington, Kentucky. This is where the majority of the Kentucky Derby winning horses come from. Its rents on this building are 15% below market for renovated units in the area. To learn more, all you got to do is go to homeinvest.com or click in the link down in the description below. Always consult with a tax advisor, financial planner, or attorney before making an investment decision. Having said all that, all you have to do is go to homeinvest.com or click in the description down below.
See you soon here on Purpose Driven Passive Profits.